Korea's central bank just raised its 2026 growth forecast by more than half a point, and the entire story runs through your semiconductor holdings. The Bank of Korea is expected to lift its 2026 GDP forecast from 2.0% to 2.5-2.6%. The driver is a semiconductor export boom. Samsung and SK Hynix are shipping high-bandwidth memory into the global AI build-out at record pace. That export surge flows directly into Korean GDP. This is not a domestic consumption story. There is a complication. The BOK is also expected to raise its 2026 inflation forecast from 2.2% to as high as 2.7%, pressured by high oil prices and a weak won. The May Monetary Policy Committee minutes released today show the BOK held its benchmark rate at 250% for an eighth consecutive meeting. Committee members flagged that policy options are, in their words, gradually narrowing. Rate cuts to stimulate domestic demand are not on the table. Now, the U.S. angle, the Fed's June meeting outcome is a direct variable here. A Fed hold keeps the dollar strong, the won weak, and Korean import inflation elevated. That inflation ceiling stays in place. If you hold SOXX, SMH, or have exposure to Samsung or SK Hynix ADRs, the chip demand tailwind is real. But watch the Fed's signal this week as the next variable. Korea's growth upgrade is real, but it is a chip export story with an inflation ceiling, and the Fed's June decision either validates or complicates it.